Investors and traders, welcome to the channel Market Chat Pattern. Today is 2nd of January 2025. A happy new year to everyone. Today was also the first trading day of the new year. So we'll be taking a look at the key US markets. We'll start by taking a look at the US dollar, then we'll also cover the bond markets, brief look at gold, also Bitcoin, and then we'll take a deeper dive into the US stock indices. As always, this video is for educational purposes only, and it is not a financial advice. So let's start by taking a look at the US dollar. This is the weekly chart, and this is exactly what we were waiting for. We had the target for the US dollar or the US dollar index to reach right into this box. It is where we have the 78.6%, excuse me, the 61.8% retracement of these highs to lows here. We also have the 1.272 expansion. So we will be watching this level around 109 really carefully. So of course this is the weekly chart. The market is really strong, and let's just move down to the daily chart and have a look. There we go. So on the daily chart you can see today, start of the new year, dollar was really strong. So what happens is that towards the end of the month, and then of course this also happens to be the end of the year, we have a lot of FX flows that come into the markets because big organizations like BMW, for example, they want to repatriate their dollars, or they need to buy euros, for example. So a lot of activity that happens. So the FX markets are typically they get really active towards quarter ends, half year mark, towards the end of the year, the beginning of the new year. So that's why we are seeing quite a lot of volatility in this market. And FX markets are getting pretty interesting because now we are moving at really key levels where the dollar could actually turn, but not yet. So we are just watching for the key levels. So here on the daily chart, there's a potential 1.6 expansion of this little bit of a decline that we had in November. Marks at 109.69. So there's a chance on the daily chart it could still get there, and then we should watch for some sort of a reversal daily candle, something like this, but there was just no follow through. So let's just go back right here. Some bearish candle formations right here maybe goes into a bit of a trading range before the change in trend happens. So we just need to be watching the price action really carefully, because we have reached our key level that we have been watching for quite some time. And if we just take a look at on the currency, so this is the forex market, this is your USD, and it just really got smoked today. I had this as a potential double bottom right here, but again we were also expecting the dollar to strengthen a little bit, and it just came in this format. So I'm just going to remove this, and what has happened now is, look here, the market has come very close to the 1.618 expansion, projection. So we have this ABCD here in this orange line. This was 1.272 of the AB leg. Now there is a potential it could extend to 1.618 times. So that's going to be a really big extension. Then of course we also are hitting a key retracement level. That's going to be the 61.8% retracement of these lows way back in September of 2022. So that is a key support level to watch. And then we have a little bit of an ABCD, the smaller one right here. So I've tried to show this in the shaded region right here. We should be watching one spot 019 or one spot 020 level really carefully. It just got smoked today, and there is a chance maybe that could be a exhaustive move. So we'll just keep on watching for the follow through, but it looks like the dollar has a little bit more strength to go. And then if we take a look at in the GBP USD, so this is the forex market. Again, here really just smashed through to the downside. I had a really nice ABCD and pretty good support level marked right here, and then the market had just gone nowhere. It was range bound for for quite some time, since 20th of December essentially. So but with this kind of strength in the US dollar, this pattern actually broke. And what we are looking at is now this leg actually extending, and then it's also coming very close to the 78.6% retracement of these lows going back in October of 2023. And these are the two key levels that I'm watching. The 1.618 expansion of this entire swing comes a little bit lower at 1.22, but this is the level that we should be watching really carefully. 1.2338, and there is a possible, so roughly we can say 1.23 is the one that we should be watching very carefully in this US dollar. I'm going to remove this later on. I'll just put some text here. What are these levels that we are watching for? So this is what we are looking at in the cable. And I also wanted to show you loonie, which is the USD Canadian dollar. In the forex market terminology is known as loonie. Here we go. What we are looking at is this. Let me just show you some long-term chart. This is the weekly chart. If we just go back, this is the data I get from TradingView, going back to the early 2000s. And what we have seen is that this market has in the 2010s peaked in 2016, and then there was another peak which came in 2020, and now it's approaching this level one more time. It's getting very close to it, and if this is the top based on this data, then it's right at the 78.6% retracement. So we'll just keep on watching this. There's a possibility that US dollar has been very strong versus the Canadian dollar. There could be a potential turn that might come in because we are approaching these levels. And then of course we have this 1.618 expansion of the swing high to the swing low right there. So around 145 level is the kind of level that we should be watching. We're very close to it. We are at 144, but we could hit 145 as well. So in that ballpark figure, 144.85, 145, we should be watching Canadian dollar really carefully. Now let's take a look at the Japanese yen. This is the forex market on the weekly chart. This is where the big decline happened, because in the month of July last year, the whole carry trade being unfolded, that scenario caused a lot of volatility in the financial markets. And what we have seen is actually the dollar strengthened versus the Japanese yen. So let's take a look at this on the daily chart. This is where we're following it. So there we go. And we don't see, although versus the US dollar, euro, and the British pound, and there hasn't been that much volatility today in this market. It's just hovering around the 78.6% retracement. Momentum is strong. It's above the 20-day moving average. So we'll just keep on watching this one. Now let's have a quick look on the debt markets. So let's take a look at the 2-year Treasury note. And here what we can see is there was pressure on the yields. At one time the yields were lower, but then they actually rose towards the close of the session. And I'm going to show you the chart of TNX, which is the 10-year Treasury note yield, and you can see that on the longer end of the curve, this is what we have seen. We have seen the yields rise back up. This is where we were watching for fall in the yields, but what we have seen is actually longer end of the curve, the yields have gone up. So interesting scenario taking place. Again, this is the beginning of the year. There's going to be quite a lot of adjustment which is going to take place. And then if we were to just look at this on the futures, this is ZN, and here we go. That's the 1.272 mark, and you can see there was a fair amount of volatility in this market, but nonetheless it's close positive, which is good on the future side of things. So one time the price was right here challenging the highs of this, but then a lot of selling came in later in the session. And from a long bond futures perspective, here we go, similar kind of price action to the 10-year Treasury note. Now, the interesting thing is we have seen quite a lot of strength that came in the US dollar today. But if you were to look at the Bitcoin was actually up by 2.61% or nearly 2,500 points. So the Bitcoin actually strengthened against the US dollar, and the US dollar actually was much stronger against the fiat currencies. So this is a really, really interesting development. It's worth taking a note of, and whether we are in this pattern ABCD, because this is 38.2% retracement where we could see the price move lower to about 85,000. That still remains intact, because where the price went is right to the 20-week moving average, and also the 38.2% retracement is a little bit higher. So breaking below this 98,500 actually is opening up doors to the downside. There was also break of this trend line right here, so maybe we are in this structure where we could see 85,000. If that breaks, we could, move all the way back to about 73, 70, even 60,000 might be a possibility. So we'll just keep on watching the 85,000 level really, really carefully. But of course, it needs to break below this 92,000 level. And the interesting one is actually gold. Gold was really interesting today because a lot of strength came into the gold as well, whereas usually when the dollar is really strong, the gold also gets a hit. But what we have seen is that the dollar being as strong as it is, and rating right into the key level that we had been watching, and fiat currencies like euro, British pound, loonie, these two, especially the cable and euro, getting really, really hit hard. The gold was really stable. That is really, really interesting. So this is the COMEX gold chart. This is the daily chart. This is, of course, the futures chart. So the spot one is going to be a little bit different. We'll also take a look at that. It has taken out this swing high, of course, and then it has also taken out the high of this candle. So that is really, really interesting development. Now, the chances are that it might actually be doing an ABCD like this right here, and this is where it is. So getting above this is actually going to be good, because the price has also moved above the 20-day moving average, which is above the 89-day moving average. This is really interesting. Now let's also have a quick look at this on the weekly chart. Here we go. There we go. So it just went sideways for quite some time, but now it's just it's just the beginning of the week. It's in the beginning of the new year, so we have seasonal positivities for this. And then if we were to take a look at this on the spot market, we can see the spot market, it was also strong. So let's see what sort of follow through we get tomorrow. Gold market has been range bound, but today was really interesting because dollar was strong, but the gold was also strong, and the Bitcoin was also strong. Now let's move on and take a look at the equity market. So we'll start by taking a look at the let's take a look at some of the foreign markets as well. So let's take a look at DAX. This is the German market. Wow, there we go. So the German DAX has a really positive close today. Ever since it hit this symmetry, here we go. This is what we had charted before. Boom, right at the 50% retracement. It's just been moving higher. It's still below the 20-day moving average, so maybe just closes the gap here, but it has got 1 2 3 4 5 positive closes, so that's really, really interesting. And if we were to take a look at this on the, here you go, this is FTSE. So the FTSE today was also up by 1.07% and gained 87 points. So really interesting. It remains range bound, but you can see the European markets that had done pretty well. Now we come to the the US markets. The US markets were under pressure. So you can see that if the European markets rally today, but the The futures were also up in the US market, but they began to close lower. Towards the end of the session, a lot of selling started to come in. Second half of the session. Now the key thing is this is the cash S&P 500. Today we took out the lows of the 20th of December, but closed higher. So that's an interesting one. It went right to the 89-day moving average, and then we also, of course, had the 38.2% retracement here, but the price actually closed higher. Now, one of the things is that although this closes negative, look, there's a wick on the top, there's a pretty big wick at the bottom as well, and the body is kind of within the center. So it's not like a really strong bar like this. It's not a Moriposo bar. So really important to see what sort of follow through we get tomorrow. Tomorrow also happens to be the Friday, so end of the week, and second trading day of the new year. So the market is really hanging by the thread because these are the support levels that we had been watching for. The market tested these, and then they have come and actually retest this, and we are now really watching for a follow through. So the follow through is if these lows of today are taken out to the downside, yeah, we could be in a ABCD to the downside structure. But if it is held, maybe the market retests these lows, rejected lower price. So in time we'll find out exactly, but our level on the closing basis was held, so just really hanging in by a thread. So we'll just keep on watching this. I was a little bit disappointed with the price action today because this 78.6% retracement of this is where for the past 2 days the market was holding, but it didn't today. So there is a fair amount of bearish momentum out there. And then if we were to take a look at this on the futures, this is the futures, and the interesting part is I don't think the futures took out the low 5874 and 3/4, 5866. So on ES 5874 spot 75, and last Friday's low 5866. So it did not take out the lows of S&P 500 E-mini futures. On the cash market it did. So pretty interesting scenario that took place. Let's just keep that in mind. And now let's take a look at let's also take a look at this on SPY as well. Here we go. So the SPY, of course, also took the low out, hit right at the 89-day moving average. So there we go. That's also sport. So yeah, I mean, really interesting where the markets are. Now let's take a look at the YM. So this is the Dow Jones futures. Here we have pretty strong support. Futures market, it also took out the lows of last December. Last December, 42,496. 42,463, so it took out the lows by a little bit, but the important thing is still closed above the 38.2% retracement, so our support levels. Now we need to wait and see what sort of follow through we get on Friday. This is the cash market. This is the Spider Dow Jones Industrial Average ETF, and I believe also it took out the low was 421 spot 59, 420, yes, 72. So there we go. So on the cash market, it also took out the lows in Dow Jones. Now let's take a look at NDX. This is going to be the NASDAQ 100, and we can clearly see that it took out the lows of last Friday. But overall, this market is actually a little bit stronger because it is still above the 38.2% retracement. It hasn't touched it exactly. Maybe it wants to do this ABCD. We have symmetry right there as well. So yeah, let's see what's going to happen. This is the cash market, and if we were to take a look at this on the NQs, this is the futures. I believe it also took out the lows, 983. Yep, it did. Similar kind of pattern, but I'm not going to use futures for it because futures with this rollover is a little bit not clear. And then if we just also take a look at QQQ, and the QQQ has actually taken out the lows, and let's see if we are very close to the ABCD. The ABCD is a little bit down, but came very close to the 38.2% retracement. Let's see on XLK, what did we do? And the XLK, I think it remains strong because 38.2% retracement is pretty low right here. So there we go. There's a little bit of divergence between QQQ and XLK. Now let's take a look at the Russell 2000. So let's take a look at this on the futures. You can see a different kind of a picture. It's, for some reason, um, the small caps seem to be stronger. So there for sure is some rotational aspect in this decline. Looks like maybe small caps are actually coming in favor, because you can see the S&P 500 on the cash market took out the lows a little bit. The Dow Jones did the same thing, the NASDAQ the same thing, and it was way higher. So maybe the selling started to dry up for small caps. So interesting one. So we'll just keep on watching this one. And if we were to take a look at this on IWM, which is the ETF for Russell 2000, you can see that it didn't take out the lows, but last December, but 30th of December, it had done that actually. So there you go. Now the interesting thing is also, let's take a look at NYA. This is New York Stock Exchange Composite. Oh wow. Wow. So what is happening here? What is happening here? So we see a fair amount of well, this is the 20th of December lows, Friday, and yeah, this almost um, closed unchanged, minus 0.01%, minus 1.6864 points. And look at this bearishness that was there. So it's the markets are giving us some interesting signals here. So what we need to do now is actually watch for a follow through. So I think tomorrow is going to be really important. It does look like in this sell off there is rotational aspect involved. And this NYSE, New York Stock Exchange Composite Index, is a really broad index. It also has ADRs. The momentum is pretty bearish because look at the price is way below the 20-day moving average, and now the 20-day moving average is also crossing below the 89-day moving average. However, today's price action, where the S&P 500 on the cash made newer lows compared to 20th of December, this one did not. Russell 2000 did not. Well, Russell 2000 did not take the lows of the previous low. Let me actually show you what I mean. Here. So this is on the futures. It had not even taken out the lows of 20th of December, but I think on cash it did that. Here, yeah, on the cash it had done that. 30th of December was actually lower than 20th of December, but closed higher. So I believe we are seeing some rotational aspect into it, and there is a possibility that we might just go into a consolidation phase here. Some of this selling might actually be drying up or being met with the buying as well. There is a possibility to it. So maybe we see this might happen, the capitulation around here. So interesting juncture. So what we are watching for is a follow through. Again, a follow through. This is what we'll be watching for. This NYA is a really interesting one because this is the one which topped the first and led a big decline, and the Dow Jones did the same thing. And now we don't see the 20th of December low not being taken out today. And the interesting thing also to note is that in S&P 500 cash index and SPY, we took out the lows of 20th of December just by a bit, and then the market closed higher, but again the candle was a negative close. And in the futures we did not. So in the futures we did not take out the lows of 20th of December. So just let me show that to you one more time right here. So there we go. On the closing basis, in Dow Jones Industrial Futures chart, our support levels are still intact. S&P 500, the levels are still intact, and also on the Qs, they are also intact because it's above the 38.2% retracement. So this is what we are watching in the key US markets. A really interesting start to 2025, and we'll see what the year will bring for us. Happy New Year to everyone. If you happen to like our technical analysis and the videos we do, please give it a thumbs up and also subscribe to the channel. And if you do, then hit that bell icon button. That way you will know when the new videos are posted, so you will not miss anything. Thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.